Are you working?
I'm working.
You are?
I'm working.
So with, I don't know if you heard that or not, but so with this landscape set out, I'm going to introduce two fascinating companies who have entered the jungle. So perhaps I'll start with you, Hugo.
Yeah, hi.
Introduce you.
Yeah, thank you for bearing with us. I really appreciate it. My name's Hugo Davies. I'm the Chief Capital Officer and Interim CFO at LendInvest. We are a non-bank, tech-powered mortgage lender operating across various segments in UK property finance.
Hello, I'm Alison Jessup. Can you hear me? Is this working? Yeah, good. Sorry, I'm Alison Jessup, CEO and co-founder of Canefin. My mission with Canefin is to transform financial services to be more fit for purpose for the task of tackling climate change. We're starting in the green home improvement finance sector, rolling out our proprietary product called carbon-linked loans that will enable home retrofit at scale.
So let's start with you, Alison. Within the jungle then, what's the challenge that, and how do you see it, and how do your business?
Well, look, I think in the space of green home improvement, I think we are at a really interesting inflection point at the moment. The last few years of high energy prices have really focused customers' minds on energy efficiencies of their homes. We've conducted a really detailed survey of homeowners last year and found that more than 40% of them want to improve the energy efficiency performance of their homes in the next 2 years. And also at the same time, if you look at some of the key technologies that's enabling this to happen, things like solar panels, heat pumps, they are getting to a technology maturity level, customer awareness level, and price point that is ready for mass rollout. Now, we know that in order to meet our net zero target, we as a country need to retrofit 1.3 million homes a year in order to meet the target. That's just the numbers published by the CCC. At the moment, last year, we installed 190,000 domestic solar panel installations, 37,000 air source heat pumps. And so we're falling very short on the target that we need to be retrofitting in order to hit the target that we've set ourselves. But why are the uptake levels so low, whilst it's clear that a really high proportion of homeowners are actually desiring these upgrades, right? So we really looked into this, and we found that one of the biggest barriers, and there are many pain points along this journey, is the really high upfront costs. So solar panel systems on a domestic basis, on average, cost £10,000. An air source heat pump installation costs up to £13,000. And especially if you look at the homeowners segment in the able-to-pay market, there is very little government incentive or any other types of subsidy that can help them that can help towards these costs. And so it is clear to me that there is a really critical role for finance here to help homeowners realize what they want to do to their homes and help them spread the costs of these improvements.
And is that similar to, you're in a slightly different space, aren't you, Hugo, but probably some commonalities within the pain points?
Yeah, absolutely. I'll go back to the beginning a little bit. You know, fintech's got a long track record of dealing with the most serious problems of our lifetime, and the effects and the impacts of climate change are clearly going to be an existential threat to our future. And I always like to think of like a Lord of the Rings type analogy where fintech's the kind of fellowship of the ring, going headfirst into battle, and then hopefully at some point, you know, the Rohirrim and everyone else will come up and
work out which
bring up the
rear.
But the point is that we cannot leave incumbent financial institutions to really tackle this problem. And yes, you know, I think hairs were set racing back when Boris Johnson was in power, and he wanted to be seen globally as a leader of all things green. But you know, we have to go back to basics. The data infrastructure, so like the EPC database, all of these critical components of that overall green ecosystem in the UK is not fit for purpose. There are lots of clever people, lots of clever institutions with lots of, you know, letters and acronyms and this, that, and the other that are trying to do really good things, but fundamentally, you'll know yourself, EPC certificates, flawed. The underlying methodology, flawed. The data infrastructure, everything about it is flawed. We don't even know if we're working yet towards a clear and coherent goal.
So just a little bit to be done.
Just to be really clear, there is a mountain to climb.
And you touched on it there about the sort of incumbents and the need for fintech. Perhaps you could elaborate a little bit more on where you see the opportunity for that to be tackled with a different approach, a different mindset.
So, my business, LendInvest, we've been developing technology over the last 10 years with the ultimate purpose of trying to revolutionize property finance, make getting a mortgage simple, fair, quick, and transparent. Clearly, anyone who's taken a mortgage out from a bank will understand that 9 times out of 10, it's a really painful process. So if you know that in order to finance any sort of retrofit or green improvement to your home, your incentive to get out of bed and go towards your bank and ask, can I borrow some money against equity in my property so I can fund X, Y, and Z, the likelihood is you're not going to get out of bed for it. It's going to be too painful for you. So consumers, customers who are attuned to this risk in the future want alternative solutions. That's why we exist. It's why Alison's company exists. We're trying to provide a simple, easy, literally as the title of this session suggests, we provide a mortgage service which allows you to submit an application within 5 minutes, within a few clicks, because we're going to do the hard work through technology to automate the data gathering, process the searches, automate part of the underwriting through a scorecard approach. But ultimately, when it comes to the really important part around the energy performance, the environmental impact of your home, I can go into a system, there are some really, really incredible solutions out there, crunch the numbers myself, and work out what I need to give you in order for you to carry out your own objectives.
And you touched on it about the able to pay not having the incentives, or that sort of, there's a gap that's underserved in terms of that, which you started to pick up there. What are you doing within your business then to create the incentives to, if people are willing and want to improve their home, they want to reduce the carbon, whether that's for the financial or the environmental, their own personal values. How then are you going to be able to shift the dial?
Yeah, so taking a slight step back, right? So I've been working in financial services for close to 20 years. I know it doesn't show my age. But I've come to realize that financial services are a really great facilitator for stuff, right? So mortgages is a great means for people to buy the homes they want to live in. Car finance, a great means for people to buy the car they want to drive. Within that role as a facilitator, there is a very powerful role that it can play to influence people's behavior as well. We're seeing some great examples in insurance, for example. Telematics insurance helps encourage people to drive more safely. Pay-as-you-drive insurance helps encourage people to drive less. But people in the industry don't always think of it that way. I think there's a lot of complacency, legacy practices, means that we've got a lot of products out there that are not entirely taking into account how they're influencing people's behavior into account, leading to suboptimal customer outcomes. So when we started Canefin, we took a step back and thought, okay, we are starting a fintech with a blank slate. So how can we innovate and line up the incentives in such a way that will influence people to do the right thing for the planet? And we looked at the home improvement finance sector in particular, and we've done extensive research, market surveys, to really understand what people want, what is working for them at the moment and what is not working for them at the moment. And we've identified several pain points, and we started thinking quite laterally about how we can solve those problems. And our product, Carbon Linked Loans, designed with those specific pain points in mind, spreading those costs for people accessibly at the point of need, capturing the value of carbon to make those costs more affordable. So that's kind of how we've thought about this.
So then within both of your businesses, is it a mixture of product design but combined with customer service, that the click of the button thing I'm thinking of here? So what is the consumer experience aspects? It's about addressing the pain points, but the methods that you're...
This is one thing that jumps to mind is actually just very simply education. So we're providing finance solutions to developers, landlords, homeowners, property investors, and there's a real fundamental lack of understanding about the benefits, whether it's in terms of like reduced heating bills or whatever it might be, from investing in your home, but also fundamentally understanding what your carbon footprint is. And that's because, as I said before, the methodology, and it's a really important point, so the methodology that drives EPC certificates is approaching 30 years old. It's very stale, and actually it's improving all the time, but up until relatively recently was actively discounting some of those technologies that Alison was talking about and speaking about heat pumps, for example. It was actively discounting that in the EPC methodology. Should also point out that the headline EPC rating in the UK is quite different to that of the rest of Europe. It's got nothing to do about your carbon footprint on your property. It's all about the estimate of how much it's going to cost your home to heat over the course of a year. So I'll just give you a really quick example. I've basically got a ton of stakeholders, whether it's my shareholders, whether it's my securitization investors, it doesn't matter who they are all building KPIs, goals, targets, stories around the EPC rating. And it's indirectly linked to carbon, but it's got nothing to do with the carbon footprint.
And you talked a little bit about the pain points there, but also the superior customer experience. But is there just an element of financial gain for your customers? Are they paying more or less for this, as a result of being a fintech and being that much enabled? How does it compare in terms of the market? Why would they come to you and if they do get out of bed and go down to the incumbents, is that part of the opportunity as well as the...
Yeah, look, I think the opportunity is for fintechs that can think laterally. So we looked at the traditional credit model, and we looked at how loans are priced. And basically, the equation for how you price loans have not changed for about 70 years. And most of the lenders are not able to capture any additional sources of value. And we looked at this space and went, actually, some of these activities that we're financing has an intrinsic value in the carbon emission reduction that comes with those activities. There is a value to the carbon emission reduction itself in the form of, we can access it through the voluntary carbon markets, we can access it through other mechanisms, but nobody is able to tap into that pocket. I think people are not making the connection, the system for data gathering and measurement is not there. And that, for us as a fintech, is a massive opportunity because we are building our systems from scratch. We can take into consideration those sorts of additional pockets of value that can allow us to pass on some of the incentives back to our customers, and therefore incentivizing them with financial gains that are proportionally aligned with the carbon emission footprint that they'll be reducing.
So behind the click of the button, there's an awful lot going on, isn't there? That's what we can take from that.
We're not saying this is simple.
Which is part of the service, though, and I think that's one of the key points that you'd be surprised. More people would be willing to have what might look like a more expensive product or solution because it hasn't come out of a traditional financial institution if they understand it better and the experience of getting it from kind of cradle to grave is infinitely better at the same time. And
moving slightly left field, but you mentioned in our briefing call for this about regional inequity in this. Could you just...
I can touch upon that.
Explain what that means in the context of...
So some of you in the room would have heard of minimum energy efficiency standards, and it was something, it's been around for a while, but it's one of the other areas when I mentioned Bojo setting the hairs running after COP26, whatever it was in the 2020, one of the outcomes of that was that the minimum energy efficiency rules were going to be tightened up in terms of the UK's transition to net zero by 2050. That effectively meant that in the first instance, the private rental sector the EPC certificates had to be a minimum of C for new tenancies by 2025, and then by 2028, all existing tenancies had to be EPC C or above by 2028. The problem is, within the legislation, particularly of minimum energy efficiency standards, as they sit today, and by the way, that 2025, 2028 goal has been pushed back several years. I won't go into that today. But the current minimum rule of E is what, unless you're exempt from the legislation, that's what you need to target. There is also a cost exemption. So if you have a property that's sub-E rated, and you spend, give or take, £3,000 in your pursuit of getting to an EPC rating of E, you can apply for an exemption. In the new rules, when the EPC is C, the cost exemption is going to be 10 grand. Now, if you're spending 10 grand on a £1.5 million property in Clapham or Battersea or wherever in the most affluent parts of London, that's a drop in the ocean. If you're spending 10 grand in Leeds City Town Centre on your 50 grand property, that's your equity wiped. Two very, very different stories, and the legislation hasn't even begun to scratch the surface in terms of kind of bridging that divide, that inherent inequity.
And that's you brought up the MEs as well, and I think I wanted to make a point about the policy flip-flopping, and the lack of policy direction is also making it really difficult for some of these home retrofits to take off at scale. I think in order to make these things work, you always need a bit of a carrot and a stick, right? So in terms of the carrot, you've got, for the able-to-pay sector, the boiler upgrade scheme is as far as it goes. The stick is virtually non-existent with the MEs being now pushed back or scrapped. Who knows what's going to happen to it? So I think more needs to be done in order to get us back on track for getting our housing stock fit for purpose for climate change.
We've only got a couple of minutes left, so if I can give you each an opportunity to have a key takeaway. If you're an audience member here and you're thinking about this, what would be your top thing that you want me to take away from this slide or from the session, or a top tip if they're on a retrofit journey?
After you answer.
Key takeaway for me is when designing a product, I think we ought to listen deeply to our customers about what they want, what works for them, what's not working for them, and think also about the potential behavioral outcome and whether or not this achieves a good outcome for the customer and probably society in general.
Two quick things. I think one, just to kind of summarize in a nutshell stuff I said before, I think there needs to be a great big reset in terms of like data infrastructure, policy that survives short-term government, and then fundamentally methodologies that allow people to work to goals that actually make sense. But I also think fundamentally the capital markets, and bias, but the capital markets hold the key, I believe. Everything comes down to capital, whether it's the provision of capital, the pricing of it, and the access to it. As long as you can get those components right, which we've largely not achieved yet, I think we can then make real strides into hitting our kind of climate change objectives.
Thank you very much for joining me for this panel. I think that's a wrap and it's lunchtime.